Grade 12s, and welcome to today's lesson. In this lesson, guys, we are going to complete two notes, namely the ordinary share capital note and also the retained income note. Okay, so we're going to do this practical example from a past paper. Here, guys, on question 2, you are provided with information related to Marvus Limited, a public company, for the financial year ended 28 Feb 2025. So on 2.1, we need to prepare the ordinary share capital note for the financial statement of financial position. 2.2, the retained income note. 2.3, guys, to complete the statement of financial position, also known as the balance sheet for the year ended 28 Feb 2025. But I am going to upload another recording here, another video where I do this question, completing the balance sheet. Okay, so it means now you need to check my profile. You need to check for more educational videos. Okay, so let's proceed. We are going to use this structure that we're given here on the answer booklet to answer those two questions. So let's start with the ordinary share capital note. We have information A here where we are given list of balances extracted from the accounting records of Marvus Ltd. When? The last day. So as you can see, we have opening balances here. Year 2024. Let me try to use a stronger color so that you can see. And then we have balances at the end of the year. So on the ordinary share capital, we have this opening balance of 6 million. We go and write the opening balance. Opening balance of how much? 6 million. Okay, here's the opening balance. So what else are they saying? We also have retained income. Retained income, the opening balance as well. We can just go and write this opening balance. Record the opening balance here. Balance at the beginning of the year. So it's how much? 1,634,000. Okay, so let's move to our ordinary share capital. So I don't think we have any information that will affect our ordinary share capital here. We can just go to additional information D. On additional information D, we are told that authorized share capital consists of 5 million. Do we have authorized share capital? Yes. Where? In our answer booklet, we are told that authorized shares of 600,000 issued. Right here, we're going to write issued here. Sorry. So, but here, we're told that authorized share capital consists of 5 million shares. So these 5 million shares, guys, this is actually the maximum number of shares that we can issue, the maximum number of shares that we can sell. Okay, so let's proceed. 1. On the 1st of March 2024, 3 million shares were in issue. We issued 3 million shares were in issue where? On the first day of March. It means now the actual number of shares of this 6 million, this is the rent value. The actual number is how many shares? Is 3 million. You go and write this 3 million here. Okay, so I think maybe I was supposed to use a different color, but I think we can proceed. Okay, so let's proceed, guys. So as you can see here, guys, on the 1st of December 2024, 1 million additional shares were in issue. We issued extra 1 million shares. Extra 1 million shares. Okay, when? On the first day of December. So you go and write issued shares. Issued shares So it was how many shares? 1 million. The number is 1 million. When right, 1 million. And then you multiply by 5, right? You multiply by 5. So 1 million multiplied by 5, obviously it's 5 million. Okay, so let's proceed. Proceeding to information, the additional information as well. On the first day of Feb, 200 shares were repurchased from a shareholder. A payment of 770,000 was made. We are repurchasing shares from our shareholders. So maybe this person is not happy with their return, with the returns that they are getting, whatever reasons. But we are doing what? We are repurchasing shares. We are recalling our shares. Okay, so what will happen to the ordinary share capital? Ordinary share capital will decrease. Share buyback. Okay, so you go and record here share buyback. Share buyback is recorded at average issue price. So on your side, please make sure that you write in full. It's recorded at average issue price. So to get the average issue price, guys, we need to check shares that were in issue, that we issued during our financial year. So to check the shares that were issued, we are just going to take our opening balance. We're told here, 1st March, 3 million shares were in issue. Those 3 million shares in issue, the rent value of those shares is how much? Is 6 million. And then other shares that were in issue, that were issued, is the 5 million. So you're going to take 5 million plus 6 million, you'll get 11 million. So this 11 million, you are going to divide by the number of shares that were in issue or issued. 3 million plus 1 million, you get 4 million. Okay? And then you will get the average issue price of R2.70. So on our ordinary share capital, guys, share buyback is recorded at average issue price. So where is share buyback? How many shares that we bought? 200 shares. And then we multiply by R2.70. Okay, so please make sure that you always show calculations and brackets on your side. So this is what will happen. We need to decrease our ordinary share capital by this amount that will get 200,000 times 2.75 should get 550,000. So we go and minus here 550,000. And then how many shares did we buy here, guys? The actual number, you go and record 200,000. So the only thing that you need to do is to press your calculator now. 6 million plus 5 million minus 550,000, you should get 10,450,000. Okay, so I wish I can have these figures on my bank account. So let's proceed, guys. Here on the actual number, 3 million plus 1 million minus 200,000, you should get how many shares? 380. 3,800,000. Sorry, 3,800,000. So let's proceed to the next question. The next question, guys, retained income note, already recorded there, opening balance. What else do we record? Net. Let me try to maximize the space here so that net profit after tax. Net profit after tax. I know that we're going to have workings here. So what are they saying? We need to check from our list of balances. The only information that will affect net profit after tax is this last information that we have. The income tax provisional payment of 1,000,000 and 12,000. Okay, so we're talking about millions today. So let's proceed. Information E, after taking into account all relevant information, the net profit after tax was accurately calculated to be how much? 3,800,000. Okay, so this is net profit. Net profit after tax, it's net profit before tax. So we need to work, guys. So you're going to take this 3,800,000. Okay, so guys, it's 3,800,000. So what are we going to do with this 3,800,000? Maybe I can try to borrow space here. But on your side, you're supposed to show what I'm going to write here at the bottom, where on brackets. So this is what will happen, guys. You always minus what? Provisional payment. So provisional payment is how much? 1,012,000. So am I getting that? On the list of balances, remember, the list of balances, we have the 1,012,000. Okay, so let's proceed. And then we also have this information here. Amount of 60,000 is receivable by SARS in respect of income tax for the year. It is receivable by SARS. It means now we need to take it away from our net profit before tax. SARS must get 600,000. If they are saying receivable, it means now SARS must get a portion from our profit if it is receivable by SARS. So we go and minus here, guys, 60,000, and then we'll find our net profit after tax. Okay, so you can just add these two amounts and minus here. Add these two and then minus, or you can just say 3,800,000 minus 1,012,000 minus 60,000, and then you get net profit after tax of 2,000,000 and 728,000. So what else do we record? Share buyback. Buyback, share. All right. So remember, we bought shares, or how many shares? An actual number, the number of shares, 200,000 back from a shareholder. Here on the retained income note, we need to find the price above the average issue price and remove it from our retained income note. Remember these shares, 200 shares that we bought back. Here's the information. The actual amount that we paid 770,000. So you can just say 770,000 divided by 200,000, and then you should get 3 rands 85 cents. So it means now we bought these shares at a price above the average issue price. The average issue price is 2 rand, 2 rands and 75 cents. So that portion, the difference, which is above the average issue price, must be taken away from our retained income note. So we go and find the difference. We're going to minus here. So multiply. Am I saying minus? multiply by the difference between 3 rands 85 cents minus 2.75, the issue price, and then you multiply by 200,000. Okay, so on my side, I'm getting 220,000. 20,000. So what else do we record, guys? Dividends, interim, and also final dividends. That's right. Dividends. We have interim and also final dividends. Okay, so guys, with this example, as you can see, our final dividends, this example is straightforward. Sometimes these questions, they tend to be a bit complicated. So if you can check, we bought back shares of how many shares? How many? 200,000. But let's go and check the information here that speaks about interim dividends. So they are saying, guys, interim dividends of 28 cents share were paid on 28 August. 28 August is 6 months from our first day of the month, which is March, April, May, June, July, August. After 6 months, we paid interim dividends of how many? 28 cents. So these interim dividends, it was paid on which shares? The shares that were there from when? The first day of March up until the 28th of August. So as you can see, from the first day of March up until the 28th of August, we only had how many shares? 3 million shares, because we bought these 1 million shares on the first day of December. They were not there. Okay, and then share buyback also happened when? On the first day of Feb. So it means now this 3 million was not affected by this movement of shares. So take the 3 million. So it will be 3 million, the number of shares that were in issue at the beginning, times, so it's 1, 2, 3, 4, 5, 6 times 28 cents, which is 0.28. And then you'll get your interim dividends of 840,000. And then final dividends at the end, we had how many shares? 380, 3,800,000. And then we multiply by, let's check. Final dividends of 44 cents per share were declared on 28 February to all shares in the share register. To all shares in the share register. So what do we have in the share register at the end of the year? We have 3,800,000. Sorry guys, I was not supposed to just write this without reading that information. This 3,800,000. They are saying final dividends, right? They are on all shares that we have in our share register. On our share register, we have 3,800,000. And then we multiply by 44, which is 0.44. And then on your side, you should get 1,672,000. And then what do? We add these two and get our dividends. Dividends of 200,000, 2,512,000.